My name is Tom Aspray. Together with John Person, we write the PA Stock Alerts. Many of probably have heard of John Person. He's a pioneer in the use of pivot points and candlesticks and has written a couple of excellent books on the subject. I know pivot points have been all the rage in the past few years. Most of those other experts that are talking about them probably learned about them from John. His expertise has been in great demand. In the past few years, he's given presentations to technical groups in Egypt and Australia, as many want to learn his methods. I have a different approach to the market. I look at the market internals and volume, and together we find the best sectors and the best stocks in those sectors, come up with a specific buying zone and a specific stop, and then manage that trade. Typically, we'll take off half the position once we get close to one of John's pivot numbers, and then ride the other half into a deeper profit. Of course, sometimes we are wrong, and we try our best to limit any losses on those positions. I've been writing about the advanced decline line for almost 25 years, starting in the mid-80s. It's one of my favorite indicators. This chart here is of the NYSE advanced decline line. It made highs in April, acted much stronger than prices in July, broke out in late July, making new highs. It was leading prices higher. Therefore, when it broke this little downtrend at the start of September, it signaled, gave the all clear for stocks. Now, I know many people say, oh yes, we've been bullish for a long time. You see on CNBC and everywhere else, but we were, and we have the evidence to prove it. In fact, you can go to YouTube and see the video that we posted on September 5th, titled Bears Get Caught, Stocks Rallied Sharply to Start Off September. We discussed the evidence we are seeing, including John's unique commitment of traders analysis that gave a very bullish outlook for stocks, and we had a great fall, and we're continuing that success in 2011. This video, of course, is still up if you'd like to review it. Currently, the AD line continues to look very strong, suggesting that any setback should be short-lived. It has started to accelerate to the upside in the past week or so. This chart is updated through Valentine's Day. Breadth will probably turn down a little bit today as it is slightly negative. We see no signs yet of a significant top, though given the market's dramatic rise, even since the November lows, one would not be unexpected. So how do we prepare ourselves for those? John and I have been each trading the markets for 30 years, and John's unique seasonal analysis points to the strongest sectors, and that's how we narrow down our search. I also do analysis on those sectors, which we provide to our clients on our website. In fact, last year at this time, John did an interview in New York where he recommended a couple of oil stocks. Here's the interview. I'll be back later.
Well, if you're looking for a certain sector or even individual stock to invest in as we head into the middle of 2010, our guest today is John Person from National Futures, here to talk about that. John, thanks for your time.
Thanks for having me, Tim.
Well, in the market, are you looking toward any certain sectors, even individual stocks that are looking to rise over the next few months?
Absolutely. This is probably from on or about mid-February going into June, probably the seasonally strong period of time for the energy sector. Many people may be aware of that or not. I like a few stocks in the sector. One I like is Exxon, believe it or not. Exxon's been trading, as we saw in late 2009, a surge in early, the first week of January 2010, a surge in equity prices. Exxon was the one of the energy sectors that we focus in on that was closer to trading near its 52-week lows rather than its 52-week highs in comparison to, say, Chevron or ConocoPhillips. So I believe at this point in time, Exxon trading closer to 63.5, 65 range, nice value play. I'm not looking for a tremendous rally out of this market between now and June, but I am certainly looking for a re-challenge of approximately 70, 72 range. So I think this is a time frame that you look to stay with the refiners, you look to stay with the oil sector. Another company I like at this point in time based on relative strength is Murphy Oil, symbols MUR.
John, good thoughts. Thanks for your time.
Thanks a lot, Tim.
You're watching the MoneyShow.com video network.
That interview was conducted on February 16th. You can see this is labeled on the chart. Exxon set back for a few days to a low of 64. Then over the next 2 months, reached the $70 level. About a 10% return from the lows, but a pretty nice trade. Similar action in the other stock that John mentioned in this excerpt from his interview. Murphy rallied up for 3 or 4 days after the interview, dropped back to test the lows, gave a daily buy signal 2 days off the low. From there until April, it rallied from 52 up to about the $62 level, a slightly stronger move than Exxon, but a very nice trade. I'm going to turn things back to John. At the end of his piece, he will tell you how you can get our latest research report for free, no sign up required, and also sign up for a free trial if you're interested. Here's John.
Hello and welcome. This is John again, everyone. Just wanted to reiterate, we're very excited as Tom and I started this project back in 2010. Our first year results speak very well for themselves, 29.3% since its inception in July. You know, I want to just remind you folks that back then everyone was thinking the double dip recession was occurring and no one was bullish on particularly the overall market, let alone individual stocks. And that's where we really excelled, by combining and integrating our two different methodologies of technical analysis. And when Tom and I kind of work together, we integrate two different methodologies. They're non-correlated yet confirming, and that's what gives us an edge, I believe, in the market, and why I'm looking to see continued improved results over the months and years ahead. I could tell you this, even here at PA Stock Alerts, if you just want to give us a trial, please just click on the link. If you want to read some of the things that we do here, you click on the research tab, and what you'll see is articles that we have written that talks about our positions, the overall sectors like the financial sector, what we're looking at, seasonal weakness or time periods of strength for sectors, as well as talking about Tom's work when he integrates with the internal structure of the market and the various sectors. So by combining both methodologies, I think we really do come up with a very powerful systematic approach to trading in the markets for all to have improved results. After all, many people look at certain stocks and love them, and yet earnings come out and there's just huge misses and people take absolute baths. I mean, Akamai Technology, Cisco, for example. I mean, when you take a look at some of these stocks and some of these earning misses, these are some just examples of where we did not get our clients in. I'm not saying that once in a while we're going to get beat up a little bit, but we do use from a approach of keeping the trend on our side, keeping the seasonality on our side. We look forward to keeping our clients on the right side of the markets. I encourage you to sign up and experience both Tom and I's work, as well as to see our performance, to see how it can help you in the months and years to come. Thank you all very much for joining us.